In 2023, the stock market soared with the S&P 500 and NASDAQ 100 hitting near record levels. But dividend stocks didn't join the party much, mainly because of high interest rates and the big interest in tech stocks and cryptocurrencies. Now, with the economy slowing and tensions rising around the world, 2024 looks like the perfect time to focus on these dependable dividend stocks. Here are 9 dividend stocks you need to own in 2024 for any smart investment in uncertain times. Number 1. British American Tobacco. BTI is a huge company in the tobacco business, and it is changing how it works. They used to make a lot of cigarettes, but now they're focusing on new products like vaping, which are thought to be safer. This change is important because fewer people want regular cigarettes these days. Even though BTI stock price went down a lot in late 2023 because of some financial adjustments, the future looks promising. Their new vaping products are doing quite well and might start making money faster than expected. Right now, BTI stock is a good deal, and it's valued at just more than 6 times its expected earnings, and it offers a really high dividend yield of 9.6%. This means people who invest in BTI could get a good income from these dividends. With this move to these newer, better products, BTI is a top choice for anyone looking to invest in dividend stocks in 2024. Number 2. OneMain Holdings Incorporated. OneMain stands out in the consumer finance sector, specializing in personal loans. It started as a part of Citigroup Incorporated and became its own company in 2013. Because of its long history, OneMain knows a lot about lending money and has done well even when times were tough, like during the 2008 financial crisis. And lately, the price of OneMain stock has been quite low, about 6 times what the company is expected to earn. Though this is mostly because people are worried about a possible recession. But OneMain is doing well in making money and has shown it can handle hard times, which makes it a good choice for investing. It has a 9% dividend yield, which means investors could get a good amount of money back from their investment. This high profitability and the chance for the company to do even better in the future makes OneMain a really appealing option for people who want to add a stock with high dividends to their investments in 2024. Number 3. Washington Trust Bancorp. This Rhode Island-based bank, with roots stretching back to 1800, has been a dependable presence in the financial sector. Known for serving the mills along the Pawtucket River, Washington Trust has adapted well over the centuries, maintaining its relevance and financial strength. In recent times, though, the bank's stock has seen a decline. This drop is mainly due to the regional banking sell-off in 2023, and the slowdown in the mortgage business caused higher interest rates. However, with interest rates expected to decrease in 2024, Washington Trust's core business areas, particularly mortgage underwriting, are likely to see a rebound. What makes WASH particularly appealing is its dividend yield of 7.7%. This high yield, combined with the bank's long-standing history and potential for a strong turnaround in the coming year, makes it an attractive choice for investors looking for steady income and stability in their portfolio. Number 4. United Microelectrics Corp. UMC is the 3rd biggest company in the world for making semiconductors, which are really important parts in technology. And this is a big deal because semiconductors are needed for things like AI, the internet, and smart cars. And even though UMC has faced some issues, like the political stuff in Taiwan, and there's been some ups and downs in its business, it's still a key player. And what's really interesting about UMC is that it offers a 7.4 dividend yield. This is a big deal in the tech world because it's not common to find a tech company that gives both a good chance for growth and a high dividend. Investors have been a bit careful with UMC because of the political issues and how the company's been doing, but this might mean the stock is actually priced lower than it should be. And this makes UMC a really attractive choice for people who want to invest in tech companies and are also looking for a good dividend. UMC is unique because it offers the chance to grow with the semiconductor industry while also providing steady dividend income. Number 5. CK Hutchinson Holdings. CK Hutchinson is a diverse investment company based in Hong Kong with interest in various sectors, including retail, telecom, infrastructure, and seaports. The company's seaport business is particularly impressive, encompassing 293 berths across 51 ports in 25 countries. CK Hutchinson also earns revenue from other maritime activities like cruise ship terminals and ship repair facilities. And recently, due to economic downturns in the region and strained US-China relations, CKHUI's stock value has dropped significantly, from a high of over $20 per share in 2015 to just around $5. But despite this decline, the company continues to perform well, trading at less than 6 times earnings and offering a strong 7.3 dividend yield. Now, as I've talked about the other ones, this high yield combined with the company's diverse and robust portfolio makes CKHUI an attractive option for investors looking for exposure in Asia's trade and commercial markets. especially those seeking high dividend returns. Number 6. Verizon Communications. Verizon, a key player in the telecom industry. They're positioned for a brighter future after completing significant investments in 5G technology. And with these major expenditures behind them, Verizon is expected to see reduced capital expenses in 2024 and beyond. This improvement comes at a time when interest rates might fall, potentially easing the load of Verizon's considerable long-term debt. The company recently reported a write-down in its Verizon business division, which includes both wireline and wireless equipment revenues. However, the market seems optimistic about Verizon's future, focusing more on its improving outlook in wireless services. Despite a recent increase in its stock price, VZ is still considered a value investment, trading at less than 9 times forward earnings. And moreover, Verizon offers a substantial dividend yield of 6.8%, making it a compelling choice for investors seeking both value and high yield in the telecom sector. Number 7. ExxonMobil Corp. ExxonMobil, a major player in the oil industry, has faced challenges at the start of 2024, with falling demand leading to a decline in stock prices. However, Exxon's large oil and natural gas reserves located in geopolitically stable countries make it a standout in the sector. The company's assets become even more valuable considering the current global tensions, such as the war in Ukraine and conflicts in the Middle East. The recent cold weather in the US has increased the demand for natural gas, which could benefit Exxon. But despite these positives, Exxon shares are trading near their 52-week lows, presenting a potential bargain for investors. This low price point, combined with the company's strong position in the energy market and the high stakes of the current geopolitical situation, makes Exxon an attractive choice for those looking to invest in the energy sector with a focus on dividends. Number 8. Southern Co. Southern Co is a power utility company, operating primarily in the southern states like Tennessee and Georgia. The company has been making significant strides in transitioning its operations towards clean, carbon-free energy, and historically, Southern generated a large portion of its power from coal, but has substantially reduced this figure, replacing it with nuclear energy. This shift is a part of a massive $40 billion capital investment plan emphasizing cleaner energy sources. While Southern experienced initial cost overruns in its nuclear program, the company is now seeing the benefits as more nuclear units become operational. With interest rates expected to fall, utility companies like Southern should benefit from lower interest expenses on their debt. Southern Co., with its 4.3 dividend yield, offers investors a chance to invest in a utility company actively adapting to the future of energy, all the while providing a steady income stream through dividends. Number 9. Duke Energy Corp. Duke Energy Corp, or DUK, is a big power company that uses nuclear energy a lot. It's really into providing power that doesn't harm the environment and is affordable too. Duke Energy has a big role in the southern US, and it's especially known for its large nuclear operations. The company runs 11 nuclear units at 6 sites in North and South Carolina, and these produce a lot of their electricity, about half of what they give to their customers in these states. Having this much nuclear power is a big advantage. It means Duke Energy can make a lot of electricity without creating carbon emissions, which is good for the planet. And this is getting more important as people look for energy that doesn't add to climate change. Right now, Duke Energy's stock is valued at around 16 times what it expects to earn. It also offers a dividend yield of 4.3%. A dividend yield is like getting a bonus you get for owning the stock, and 4.3% is a pretty good deal. This makes Duke Energy a wise pick for people who want to make money from their investments through dividends. It's a good mix of being a responsible choice for the environment and also a chance to earn some income from your investment. So, what are your thoughts on these dividend stocks for 2024? Do you have any experience with them, or are there others you're keeping an eye on? Let's chat about it in the comments below, and don't forget to like, share, and subscribe to our channel for more helpful content.